Okay, let's dive right in. We're talking about a massive, almost overnight shift in the global energy world. A crisis has slammed the door on the world's most important oil highway, and it's forcing a high-stakes gamble on a new frontier. This is a story about geopolitical desperation versus incredible geological risk. This quote just nails it, doesn't it? While everyone is understandably freaking out about a supply crisis in the Middle East, a totally different story is unfolding in the ice. And this isn't just about finding more oil. It's about finding secure oil, away from all the chaos. To really get your head around how big of a deal this is, you have to look at this number: 20.3 million barrels of oil every single day. That's what used to flow through the Strait of Hormuz. We're talking about a quarter, a full 25% of all the oil traded on the world's oceans. And just like that, it's gone. This isn't just some tiny hiccup. It's a body blow to the entire global economy. And this slide, wow, it lays it out in black and white. On one hand, you have the current reality, a massive, high-risk choke point that's basically a ticking time bomb for the world's economy. And on the other hand, a wild idea, an alternative. Zero production right now, sure, but in a totally stable part of the world, Greenland, with absolutely enormous potential. And that right there is the arbitrage we're talking about. So, with the world in a desperate scramble for new oil, our attention turns north. This brings us to the big thesis, the emergence of the Jameson Land Basin as a potential solution. This isn't just a random pin on a map. People are starting to see it as a real geopolitical hedge against the madness happening thousands of miles away. So, let's get into the numbers. What are we actually talking about here? Well, a really well-respected independent firm called Sproul ran an assessment. Let's break it down. The P90, that's kind of the low-end, conservative number you're pretty sure is there, and even that is over 1 billion barrels. The P-mean, or the best guess, is a whopping 4.2 billion barrels. But it's that P10, the high-end, everything goes right number that really changes the conversation. 13 billion barrels. That number is what we're talking about when we say alpha. It's the kind of number that makes major investors sit up and pay very close attention. Look, if that P10 estimate is even in the same ballpark as reality, Jameson Land isn't just another oil play. It would be one of the single biggest undeveloped oil discoveries on the planet. It's a number so huge it could actually move the needle on global supply. But, and this is a huge but, getting that oil is a totally different game than what the market's been used to. For the last decade, it's all been about U.S. shale. Think of that as a sprint. Drill fast, make money fast, but the well dries up pretty quickly. The Arctic is a marathon. It takes a mountain of cash up front and years, literally years, before you see a single drop of oil. But what's the payoff? If you actually pull it off, you get an asset that pumps out oil for decades and decades. So who on earth is actually trying to do this? Well, there's a company that has stepped up to take on this huge challenge, hoping to be the one to finally turn all this Arctic potential into reality. Let's talk about Greenland Energy, ticker GLND. They've raised the money, about $70 million, specifically to drill 2 big wells in 2026. But here's the really crucial part. Look at their partners. When you see a name like Halliburton, one of the biggest oil service companies in the world, get involved, that's a huge stamp of approval. It means this has gone from being just a cool idea to a real execution-ready project. Okay, so we've heard the dream. It sounds amazing, right? A potential solution to a global crisis. But for every thesis, there has to be an antithesis. And now we have to turn the coin over and look at the brutal, ugly truth about looking for oil in Greenland. You know, the legendary investor Charlie Munger had this famous saying, and it is the perfect warning for us right now. The history of resource exploration is just littered with amazing stories of incredible potential that turned out to be, well, a hole in the ground with nothing in it. It's a reminder to be extremely skeptical because the history here is not pretty. And this is the gut punch. 95. That is how many times companies have drilled in and around Greenland since the 1970s. And the result? 0. Not a single commercially viable barrel of oil. This includes the famous story of Cairn Energy, which blew through 1.2 times billion dollars, found nothing, and just walked away. That's a billion-dollar lesson in how hard this is. All of this comes down to one critical concept: dry hole risk. It's the absolute nightmare scenario that you'll spend tens, even hundreds of millions of dollars drilling a well, only to find nothing. Or almost worse, you find a little bit of oil, but not nearly enough to ever pay for the cost of the well. In a place like this, it's not just a risk, it's the most likely outcome. So, why is the track record so bad? Well, it wasn't just a string of bad luck. There are some monster geological problems here. First, something called tertiary uplift. Imagine the Earth as a layer cake. This uplift basically pushed the cake up from below, cracking all the layers that were supposed to trap the oil. Then you've got volcanic intrusions. This is like having crazy static on your radio. Thick layers of hard volcanic rock mess up the seismic surveys, making it almost impossible for geologists to see what's really down there. And finally, you have thermal maturity. The rocks might never have gotten cooked at the right temperature to make oil in the first place. Which brings us to another great piece of wisdom. If you find yourself in a hole, maybe you should just stop digging. And you have to ask yourself, with 95 failed attempts and billions of dollars lost, is drilling another hole in Greenland just throwing good money after bad? Is it time to just quit digging? And this is where it all comes together, the synthesis. The whole thing is this incredible strategic trade-off. You're weighing the world's absolute desperate need for new, safe oil against the massive, historically proven risk that you'll find absolutely nothing. Now, here's the crazy part. The value of a company like GLND is almost completely tied to the price of oil. Think about it. At $60 oil, nobody cares. The project is a joke and the market is full of fear. At $90, suddenly that 4 billion barrel best guess seems kind of interesting and speculators start sniffing around. But at $130 oil, driven by a full-blown crisis, forget it. The market goes nuts. Everyone starts pricing in that 13 billion barrel dream scenario. It's pure hysteria and FOMO. The company's value becomes a leveraged bet on geopolitical chaos. And when we talk about oil prices, we need to be really specific about which oil price. WTI, that's the US domestic price, it's kind of shielded from a global shipping crisis. But Brent crude, that's the international price for oil that moves on a boat. And when a choke point like Hormuz shuts down, the price difference, the spread between Brent and WTI blows out. For a potential new source of oil that would be shipped by sea, Brent is the only price that matters. So this all boils down to this single biggest question hanging over the energy market. For the last 10 years, the U.S. Permian Basin has been the engine of growth, but it's starting to run out of steam. So if we can't get it from U.S. shale and we can't get it from the Middle East, where is the next big slug of supply going to come from? And that leaves us right here. This is the ultimate trade. It's a massive wager, pitting the world's desperate need for energy security against the profound, terrifying uncertainty buried deep under the Greenlandic ice. So will the drill bit in 2026 strike the solution to a global crisis, or will it just become the 96th expensive failure in a very, very long line? The answer to that question is going to echo through the entire global economy.